Well, Nvidia reporting better than expected first quarter revenue. Earnings, depending on which metric you look at, missed estimates when including that $4.5 billion charge and related tax impact related to the H20 chip. So if you look at and include the impact of that charge, you get 81 cents a share. If you exclude the charge from H20, you get 96 cents a share. The consensus estimate was 93. The stock is performing as though there was a beat somewhere in there. So let's get a closer look now at the key catalysts for Nvidia and the big tech landscape. Let's bring in Synovus Trust Senior Portfolio Manager Daniel Morgan. Daniel Morgan, it is lovely to see you. Thank you so much for joining us.
Really?
So what do you think of these numbers, as we are seeing this initial reaction and as we await the call?
You know, Julie and Josh, I think you need to be a CPA to interpret these numbers and come up with a picture of exactly what's going on. I mean, I think the things that really stood out is what you guys talked about, which is, I think what the street is doing, they're kind of netting out the H20 charge-off, right? It was, what, a $4.5 billion inventory charge-off. They said on the call or in their notes that they missed out on $2.5 billion in revenue on the first quarter. And on the second quarter, they missed out on about $8 billion related to the H20. That would be revenue they could have accrued. You know, they had it ready to ship, but they couldn't do it. So I think maybe that's why the street is reacting the way they are, because obviously the guide going in the second quarter, Josh, was $45 billion. Street was looking for $46.5 billion, so it's a little bit off. But then if we add in that $8 billion, right? Wow, it's it's over $50 billion, right? So again, I think you need to be a CPA to kind of get to these numbers. And that gross margin number too, right? Without the charge, you're at 71%. With it, you're at 61%. So pick your number, right?
Well, Dan, I'm not a CPA, but fortunately I have you to help me try and make sense of all this. I'm wondering, Dan, if I'm an NVIDIA investor, I'm listening to this right now, how should I be thinking, Dan, about what that opportunity for this company is in China, not just now, but long term? How would you frame it?
Well, you're right, Josh, and the opportunity is still there. I mean, there's a lot of thought out there that they're going to do a streamlined Blackwell chip, and they're going to sell that into China once they can get it approved, by the Trump administration. Very similar to what they did when they did the scale downs on the H20 and the L40. So I don't think China's off the map, right? I mean, they at one point were getting, 15, 20% of their revenues coming from China. So, but the other thing, Josh and Julie, it's kind of interesting, and, just to kind of take a step back from this minutia of this report, think about some of the things that they may have going on, let's say in Saudi Arabia or Middle East. We know that's now been opened up more for trade. There was a big order that came in for 18,000 GPUs that's going to be executed here. So even if China never gets back to the way it was before, I still think that there's long-term opportunities in other parts of the world, like a Saudi Arabia, like the Middle East, because now we're opening up relations with them and we're going to become more involved with them in terms of trade.
Yeah, I was going to follow up with that question myself. And because you're exactly right, I feel like the Middle East is the poster child example of these sovereign deals that I think are possible with them. Yep. And clearly, I guess you're seeing some of these other sovereign opportunities. I had also mentioned earlier about the potential that Jensen started to talk about in the enterprise of companies themselves starting to deploy this. I'm curious for your take on that.
Yeah, I mean, enterprise is big. Josh and Julie, the one thing that we know that's been going on with a lot of the big hyperscalers, for example, is they've been producing their own chips, right? They're still using Nvidia chips, but they're using Broadcom and other avenues in regards to that sector. Then if you look at enterprise, that's also, like you say, Josh, another huge area for them going forward. So, we get really caught up in data center and what's going on there and so forth. Obviously, gaming is another part of their business, but enterprise, sovereigns, all these other areas that could continue to expand for them. It's not just all the hyperscalers and what their CapEx budgets are going to be, right? We've talked about that a bunch of times on the air together. There's more to it as we look at these other avenues of growth for them.
We're looking at some more details here from the filing about the the China business here. The company said it may be unable to create a competitive product for China here. It would have to foreclose from competing in the China market. That would materially hit the business here. They do expect to begin shipping the Blackwell Ultra in the second quarter, which is the quarter that we're in right now, fiscal 2026 here. And the company is still evaluating the options to comply with the USG rules. So again, that's coming out from a filing that Nvidia has made alongside its earnings, Dan. And so related to that, I would ask, there has been some reporting that the company is going to be introducing a less advanced chip than H20 to still be able to ship into China. How important is that product? Does it have to really come out with that or risk disappointing the street?
Well, Julie, after everything that's happened so far with this soap opera, right, with the China market, I think at this point, a lot of people would just applaud any chip that would get approved. You mentioned the new one that they disclosed in the notes. I talked about maybe a watered down Blackwell. So anything they can do in China going forward, I think would be construed as a positive. Nvidia is not as focused on China as, let's say, Qualcomm. Qualcomm generates about 50 to 60% of their revenues from China. Applied Materials generates a lot. So does ASM lithography. So, 15, 10% maybe China revenues. So if that was to dwindle down to 5%, like I was mentioning with our conversation earlier with Josh, I just feel like they're going to be able to make it up in networking, sovereigns, Saudi Arabia, these other opportunities. So I think anything out of China at this point would be applauded by the street.
Dan, I have to ask you.
That makes sense.
It does. It does. I want to get a final question here. The competitive landscape, Dan, that Jensen Huang finds himself in, how has it changed, if at all, Dan? I ask you as someone who I think, Dan, you own both NVIDIA and AMD, correct?
We own AMD. We also own Broadcom. So that's our kind of play on the AI chips. And Qualcomm.
And how would you characterize the competitive market right now, the competitive landscape for this company, for NVIDIA?
Yeah, I still think that, Josh, they're in the post position. AMD, as you know, has come out with their new MI350. They've got an MI400 AI chip that's going to be coming out, and they've backloaded everything in the second half of 25. Intel, Josh, which you've talked a lot about on your show with the Gaudi Falcon Shores, they have a new Panther Lakes. A lot of those chips were discontinued. They have now Panther Lakes coming out next year. So they've been very slow to get to the table. So I would think AMD is probably number two. Marvel's also in there. Broadcom, as you know, guys, they make chips for other companies that they use for their own proprietary uses. They don't produce AI chips directly that compete against NVIDIA like a Blackwell. So, but I still think NVIDIA's got the top position right now. They're still 70, 80% of the market share. So really, until Intel gets it together and AMD can really punch them in the face and Marvell can come up with a little bit more, they're still going to be in the top.
All right, can't fight it. Thanks so much, Dan. Great to see
Julie.
you. Appreciate it.